So if you're an SEO and you're buying websites or you'd like to sell your website, we've got the perfect podcast for you. Today, I've got Mike Yan on the program, Clean Air Digital owner, comes from a rich SEO background at Red Ventures and also Pillar 4 Media, where he did a lot of M&A and acquisitions. Mike is a super smart SEO I've had a ton of respect for. And over the years, also Red Ventures, they're a huge, for people who don't know, own a ton of websites and are clearly intelligent about this activity. And even if you're not doing it, I think there's something here just to understand what your business might be worth or your company that you work at might be worth. I'm hoping there's some good stuff here. So excited to have you on, Mike.
Thanks for having me, Ross. Excited to be here.
So, I mean, I kind of very high level touched on your experience and background in M&A, but kind of to give some color for this conversation, could you go a little bit deeper on that in your past experience that informs this conversation?
Yeah, absolutely. So I guess I'd bucket my experience into probably three different areas. One is working jobs with some of those large media holding companies that you mentioned. I guess they could now be categorized as Red Ventures from 2013 to 2019, where I was part of a lot of the due diligence teams, leading a lot of SEO analysis for those acquisitions that they've made over the years. And then I left Red Ventures at the end of 2019 and joined a much smaller holding company called Pillar 4 Media in the beginning of 2020, when it was about 10 people or so, and built their M&A prospecting, due diligence, and just kind of operational process and framework there to acquire a bunch of large affiliate websites over the last 2.5 years. And then just recently, earlier this year, ventured out on my own, so doing my own thing now, a little bit of consulting, as well as working on my own personal portfolio of websites. For the consulting portion of that, I help a lot of large companies and PE firms and others do M&A prospecting and due diligence to find acquisitions and figure out what's a good buy and what's not. And then I, in my personal portfolio, make a couple of investments per year. And typically it's just me. And so I am pretty low volume, but big bets on the investment and acquisition side. And there's a ton of people out there who are doing a lot of volume in terms of high number of acquisitions per year. But yeah, for me, it's really just about the quality of each one, and really I'm a small team, so I really enjoy the analysis portion of it, but really that's kind of my bread and butter, and fortunate to work with a lot of really smart people over the years on biz dev and FP&A teams to learn about that entire process, and have really kind of developed a system that works well for me for acquiring sites for myself and for clients.
Nice. Had to Google that. For those not aware, correct me if I'm wrong, financial planning and analysis.
Yes.
Correct. Yes. Nice. Yeah, that's great. It makes a ton of sense. You probably are one of the people with the most experience in this area, so excited to kind of ask a lot of questions about things here. You mentioned doing personal deals right now. I'm sure you're talking to people. It's a unique world out there from an economy standpoint.
Yeah, it is.
Also SEO, of course, evolving. So like what does mergers, M&A and SEO feel right now? Like how would you describe the current state of affairs?
Yeah, I'd say it's still very active despite some of maybe the more macroeconomic environment that we've especially been in the US and even in the UK and other markets recently. Investors are still really hungry to grab up digital real estate and assets, and that is driving up valuations, I think, in some sectors of SEO M&A. And then I think there's really a lot of different areas of M&A and types of M&A that don't necessarily get the spotlight all too often when it comes to what the, I guess, large majority of the SEO community typically sees on a day-to-day basis, whether it's through marketplaces or expired domain lists or other very visible types of M&A. So there's a ton of private deals going on with individual sellers, which is kind of where I live. I much prefer doing cold outreach, finding investments in
Not
insights on
compete.
my own. Yeah, yeah, not visible for the entire world to see. But typically also I just find better quality sites. I feel like in those areas that have a lot more incremental value that I can go out and create immediately after acquisition. And typically they're a little bit less sophisticated sellers, and so it is easier to strike a deal with those folks and make it work out for both parties. But yeah, I think that's a big portion. I think of the large volume of deals is a lot of just private individual sales that really don't get publicized. And then I think the more visible area of M&A and SEO is really a lot of these we'll call them like medium market media holding companies that are buying affiliate websites anywhere from mid 5 figures all the way up to low 7 figures. And then you have your behemoth media holding companies like Red Ventures or Dotdash and some of the more popular ones. And then PE firms are also doing a ton of acquisitions of kind of SEO first assets that are really there's a lot of deals going on for those guys as well. So lots of activity in the space and definitely not a shortage of sites to go out and acquire and kind of different digital real estate, whether it is a website or potentially another channel or type of asset that folks are interested in.
Makes sense. So one thing you made me immediately wonder, I'm sure you at least occasionally look at sites like a Flippa or what
Mm-hmm.
have you. Obviously, you probably have been following in like SaaS markets. There's compression of valuations in the last year or so. Now, physical real estate is coming down in
Yeah.
terms of that cost. Do you see fluctuation in digital real estate? And I'm sure like just willingness to go out and buy might, if that like tempers, maybe that impacts it a little bit. But yeah, do you ever see ebbs and flows of that, and what has caused that?
Certainly, I think most of the time it really just depends on the actual asset as to like how the value is going to fluctuate based on the quality of the asset or the broader market trends. As an example, there has been a lot of fluctuation, obviously, over the last 2 to 3 years in a lot of durable consumer goods markets, right? So for folks who are holed up at home, there's a huge influx of like home gym equipment being really, really popular and 4xing in terms of search interest, which has kind of slowly come down over the last year and a half as folks have gotten back out. And so I think there's a lot of context that you need to consider in the potential macroeconomic environment or just how potentially Google is treating that niche or just how much consumer demand there is and what the growth trajectory looks like for that specific category as to like what the valuation multiple could potentially be. But really I kind of see for I guess the large majority of like smaller niche website deals, you're typically looking at like a monthly recurring revenue multiple of around 30 to 40x. But it can be under that for some lower quality assets, obviously, that need a lot of work from a links or content perspective. And then certainly can be over that for some really rich sites that have potentially a big community behind them or just are really high quality or in a very, very competitive niche.
So that's not just an affiliate site, like that could be any kind of site, or is that
Sure.
mostly affiliate sites that you're seeing that range for?
It's definitely mostly affiliate sites that I'm seeing that range for, although there are alternative monetization methods that basically apply the same valuation criteria or approach, let's say. So I would still basically use the same monthly recurring revenue multiple strategy for valuing something that is mostly display ads or other kind of common monetization methods among niche websites. Although the valuation methods will differ based on if it is monetized or not. And I think the transition, you mentioned it earlier, of like affiliate site to like affiliate business is certainly a big distinction that potentially changes the way that you value it in terms of going from something like a monthly recurring revenue multiple to something like an EBITDA multiple, where it actually has like legit OpEx cost and people cost associated with it.
Could you give an example of like that difference, affiliate business? Like what would qualify as that compared to a site?
Yeah, absolutely. I really think about an affiliate business as having components of it that are a lot more durable in the long term, that basically you can create a competitive moat around, and that are a competitive advantage around that is incredibly hard to replicate, right? Like Credit Karma is an affiliate business, or like Bankrate is an affiliate business. But something where you are creating a lot of just info content or affiliate roundups or something like that, where you're just monetizing through affiliate programs and those types of traditional ways of getting traffic and audience, I would categorize more as an affiliate site because it's more easily replicable.
Makes sense. So I'm sure you've seen or potentially participated in it, like M&A for SEO. There's two routes. You're buying a business.
Mm-hmm.
You've probably heard and seen people do it sometimes for links only.
Yeah.
Do you believe in that practice? Have you done that? How do you think about that? How would you value or consider that model, if at all? Curious.
Yeah, absolutely. So that's something that I've definitely done before and am a fan of, I think, in the right context, in the right situations. So I think buying sites purely for we'll call it an injection of authority or content or what have you, is certainly a great strategy for some businesses. So I think that could potentially look like something like a site that is a small tool or calculator or something like that has a few thousand linking root domains that you potentially want to plug into a related site and kind of redirect or tuck it in to drive additional traffic for whatever rankings it has, plus transferring a lot of that authority over to your main monetized property. See that all the time in SEO, and it's a really popular strategy that still works for the most part. I'd say that there are some instances certainly where it can be poorly executed and not work out, but have definitely seen that strategy work well. And then there, I think, are also different investment theses that you may have for buying something that isn't directly, you aren't necessarily directly buying it to be a buy and hold property on your platform, and serves potentially as a way to get into a new subtopic, for example, of the main niche or category that you're in. So if you are in, let's say, I'm trying to think of a good example. HubSpot's a really good example here. They do a ton of acquisitions that basically redirect or help launch them into different subcategories of a lot of their great marketing content that's on their blog. And I believe they did a acquisition a few years ago of a WordPress site that had a ton of really good WordPress content, brought all of that over, and they basically went from zero to a pretty significant content inventory around that giant topical area that helped essentially accelerate their inputs in that specific subtopic. So I think your investment thesis is really important to crystallize when you're valuing a potential M&A target of why you are acquiring this thing. And I think there's a lot of different ways to approach it for not just monetization or kind of revenue arbitrage, so to speak, but also for going into additional subcategories or different topics and really accelerating the time opportunity cost of getting into those niches, right? Because, if you build 1,000 pieces of content at a certain cost per article, that's going to take a while. So if you can just pay that cost per article on a potential acquisition and accelerate your time to get to scale in terms of traffic and links in that area, I think there's a lot of companies with really healthy balance sheets that are going to take that bet.
Makes sense. Smart practice for sure. So my brief experience in this industry, in this uh, way of doing things, is we did used to run an affiliate site, and I diverged it from Siege about 2 years ago. But anyways, like a year before that, we got an offer from a similar media company, and an interesting question. I wonder for what your experience is deal structure of these kinds of things. Our specific offer, I'm a little vague on it. The site was doing quite well in the 7-figure range, and it got, I believe they did 50% ish up front, and then kind of like over 2 years, I think, paid out an earnout essentially, but I think it was fixed. Maybe it was based on performance of the site, which to me was like a little, I'm like, what? Obviously you vary. It's like, why wouldn't I just hold the site in some ways, if it's modeled in some ways like that? But anyways, rambling a little bit, that to say, like, what is, obviously if you're a buyer, you want an advantageous deal structure. What kind of deal structures do you see or recommend to like further acquirers to de-risk this thing and get cash flow and all that stuff?
Yeah, absolutely. I think it really depends on the scale of the deal. Typically, for a lot of acquisitions that are sub 7 figures, most medium to kind of large companies that are buying up a lot of those assets are just going to be paying all cash up front. Obviously, that's going to be different just based on your situation. And so I think there's a lot of different ways to structure a deal to get something done, though. Certainly cash up front can be a certain percentage of the deal, and is pretty much always going to be at least a good chunk of whatever the total price is of that acquisition. You mentioned an earnout. That's a really popular way to defer some of those cash payments and also incentivize the team if you're bringing them over in terms of site performance to hit potential targets over the next 1 to 2 years for additional payouts. You could also have just basically deferred cash and seller's notes that can be paid out over the course of a certain time frame, and then you could obviously take on debt as well. So for a lot of these huge mega deals that are going on in SEO, there's a lot of debt financing that's going on behind the scenes with those large companies basically having partnerships with obviously very, very reputable financial institutions to back a lot of those investments. So probably the most notable one that I was a part of at Red Ventures was the Bankrate deal in 2017. The total price tag on that was $1.4 billion. And so they had to take on some considerable debt on that one to get the deal done. It was actually a public company at the time that they took private. There was a lot of complexity with a deal like that, obviously, and those are certainly rarer in our space. But there's a lot of different ways to make a deal happen, and I think actually one of the other components that I'll mention that is quite popular too is if you're bringing over somebody to work on your team who is a part of that acquisition or asset that you're acquiring, which often happens a lot in a lot of founder-operator site businesses. So let's say that somebody owns not only a site but really a really popular YouTube channel where as the personality, like if they get removed from the business, it falls apart and a lot of the value goes away. Having them retain some equity when they come over to the team can also be a great way to get a deal done.
Makes sense. I think I've seen that. Maybe you guys ended up acquiring the site. Someone had a sleep site. Maybe I should look at your portfolio. Is that actually what I'm thinking of here?
No.
YouTube videos. Yeah.
Yeah. So that can certainly be an example of one where that's the case, but I've seen that happen a lot, especially when there's like a YouTube channel or a big podcast following or something like that, where this like the person is the business, and so it's important for them to stay invested and to bring them over and to get them excited about the long-term growth of the business, and that can be a good component.
So the Red Ventures deal obviously is an outlier, but I don't know if you've seen
Yeah.
people in a middle range leveraging debt. And like one of the things I'm curious about there, I don't know if you have sample size enough to know this, but like obviously in the real estate industry, we have relatively transparent rates that are available. Like it
Hmm.
was 3% or under. Now we're like up to 7%, 30-year fixed
Yeah.
rates. I'm curious, like if banks look at digital assets and they're like, these are risky. I wonder if that is, I'm curious if that's the perception, if that's so like, would you normally need to be paying like 12, 10% interest rates? Yeah. Is there
Yeah.
anything there?
I think it really just depends on the standing of the business that is taking out the debt. I think, at least from my personal experience, which all is a very, I guess, narrow view based on what I've gone through. I think a lot of banks and financial institutions are becoming a lot smarter and more savvy about what digital acquisitions are and the risk profile that's associated with them. Granted, they're always going to want, their typical financial statements of last 5 years, very detailed, everything to make sure that they go through their analysis process to make sure it's good debt to take on. But there's also in a lot of those, we'll call them debt pitch meetings, where leadership team is going to the bank to say, hey, we would like you to give us dollars for this acquisition. There are certainly a lot of components of those decks that are related to traffic and like, hey, this is why we believe that this is going to be a stable asset moving forward, and not just focusing on profit margins or more financial metrics for those types of conversations. So I think they're certainly becoming more savvy, and I think the risk profile really just depends on kind of the current standing of the business that's asking for the investment.
Makes sense. That's a good segue to one of the questions I was curious about as well. Obviously, in the SEO industry, there's penalties,
Yeah.
major losses in traffic, volatility. What, like, let's say someone is like seen some recovery, maybe they're not back where they are, but there's a clear history of some kind of like impact. How would that impact some of those valuations you shared? Would you even touch a deal like that? What's your personal philosophy and also what you've seen there?
Yeah, personal philosophy, I don't really touch them. Yeah, I think it all depends on the context, obviously, of the deal. It just kind of gives me the heebie-jeebies personally, and obviously I want to do my due diligence there and make sure that I look into the why behind the traffic drop or the general volatility. I'd say links issues are way harder to clean up than content or other major technical issues, but really your due diligence process has to be really thorough to understand why that volatility is there. Because if you see a major traffic drop, but it's just a technical issue that can be potentially solved through just some engineering work and elbow grease, like that's obviously something that is going to be a lot more attractive and probably exponentially attractive, because like that's an immediate growth lever for you to turn on right after acquisition. But if it is some like major quality issues that have been caused by some sort of algorithm update or kind of repeated volatility after a lot of different major updates, then I'm going to be looking at how difficult is this thing going to be difficult to be cleaned up, and is that going to be worth the investment, obviously. So yeah, for me, all about the due diligence process. I generally stay away from stuff though that has a lot of traffic volatility, even if it does have a lot of content issues that could be cleaned up. But yeah, for me, I'm really just looking for a lot of assets that I think have good bones to them. That in my acquisition thesis, I have several tenants to basically back how much growth I think I can achieve in the first 12 months, 24 months, 36 months.
Makes sense. So let's say you've gotten someone to verbally agree to a deal. You're moving forward with it. With digital assets, what does that due diligence process look like once you've kind of got on the same page about that pricing structure?
Yeah. So actually, the bulk of my due diligence process happens before the offer stage, because I want to make sure that like the price that I offer is something that has the context behind like the current state of that site or that asset. And so really, once you reach the offer stage, I'll typically go into a period of exclusivity after signing a letter of intent for typically 30 days to basically get full access to like all financial statements outside of what they have already provided, access to Google Analytics, Search Console, and any other kind of meaningful data and reports to essentially just verify all of your assumptions and get all of the legalese and paperwork done. Once you enter that period of exclusivity, I typically like it's a lot of window dressing at that point, and you're basically just looking for like any red flags or watch outs that were unexpected or different from what you assumed in a lot of your due diligence. But as for the due diligence process itself, I have a lot of kind of core components that I'm looking at that honestly a lot of folks in the SEO community have been really forthcoming with sharing, especially in the last couple of years, which has been awesome. Just a lot of good stimuli out there for just how to value websites, which has been great. But really looking at a few things. So one is deep diving on traffic and rankings. So what has been ebbing and flowing over the past 12, 24, 36 months? What are their main keyword buckets? What are their top pages? And are they too top heavy potentially in certain areas? So are there certain keywords where, their top 5 keywords, if they topple on some of those, like the bulk of their traffic is gone. And same for top pages. So typically diversity of traffic is certainly something that I'm looking at there, as well as topical mix of traffic, right? Google, especially over the last several years, we've seen this shift to topical authority for ranking well in a lot of different subcategories. And so making sure that depends on the category in the website that you feel confident about them being deep enough in those categories or not spread too thin, certainly across a bunch of different stuff where they're sort of a master of none. Looking at traffic mix, looking at traffic trends against algorithm updates like we talked about to see what has potentially caused a lot of that stuff. I'll actually give an example there around traffic fluctuations. I was looking at this site last April that if you look at just the overall traffic curve for the website, it looks like, which it did, got hit by Medic and then a few other major algorithm updates that were largely or meaningfully affected, not largely, in those health niches. And that's where a lot of their traffic got hit. But given like the core focus of the site, that was a lot of like auxiliary content or ancillary content on the site that to me as the business owner didn't really matter if I lost that traffic because it really wasn't relevant, wasn't that monetizable. But if you looked at the kind of base of traffic that was the stuff that I cared about and kind of the core business, that was really steady over the course of the last 3-4 years of the site. And so that actually gave us a lot more confidence to buy that site, which we ended up buying. It's still been steady since. And so I think there's, like I said, context around what areas of the site those traffic fluctuations are coming from. So traffic analysis is obviously a big one. And then looking at the competitive landscape trends as well. So I mentioned looking at SERPs earlier and just macro trends of like, are there any SERP features that Google's going to potentially or has already inserted into the landscape that can be huge disruptors for potential traffic to the site. I'll give an example in like the personal finance niche. Google rolls out or has rolled out a lot of calculators over the past several years, right? Like a mortgage calculator. So if you're mortgagecalculator.org, like, you know, your business, your entire business just got like annihilated from a top line traffic standpoint in 2015, 2016 when they rolled out that calculator. But, you know, that could be an example of potentially, you know, a site that you buy for a redirect or tuck-in acquisition where you really just acquire it for the authority to drive towards one of your main websites, obviously. That would be a probably more expensive redirect acquisition. But
sure.
Yeah, anyways, I'm looking at the competitive landscape, seeing what Google's doing and where they're headed, and see if there's any sort of like big watchouts for potential large drops in traffic over time. I'm looking at the macro niche and category landscape of our search impressions growing or falling over time, and what does the affiliate landscape or just monetization landscape look like in general. And so for digging into that, I'm going to be seeing like, is the affiliate landscape very sophisticated at this point, or is it still kind of in its infancy stages? So you'll see in a lot of like really competitive affiliate niches like CBD or mattresses or others like that, that it is really a market share land grab environment where a lot of these brands are willing to deal custom affiliate deals that are above kind of your base typical base rates that you see in affiliate networks, as an example. And so there is a big potential emphasis on business development and actually having like partnerships and relationships with a lot of these brands versus just your kind of out of the box affiliate deals that you might get through just the marketplace on ShareASale or Impact or another one of those guys. And so looking at the sophistication of those affiliate landscapes is important. There are certainly some categories where like the brands just like don't care about the affiliate landscape, or are just and they're just unwilling to budge on like 3-4% whatever of commission, right? And so there's less wiggle room there, where maybe you have a longer term thesis on the growth or the sophistication of that potential niche, but short term, definitely something to take into account into your acquisition thesis. And then certainly for some other types of niches, they're going to be willing to deal a lot more, and there's a lot of value in having kind of those deeper relationships with folks. But yeah, looking at those competitive landscape trends, let's see. The ability to create a competitive moat is important in my opinion. That's not going to be important for everybody, but for the acquisitions that I'm making and the ones that I'm advising on, I really like to see, is there an opportunity to potentially create something that is really hard to replicate and really differentiated, that can help you build a lot of branded impression volume and branded notoriety in the space where consumers or businesses or whoever your target audience is are directly seeking you out for that thing. And something that your competitors is just going to be, really hard for them to catch up. And so, I'm looking for those types of opportunities to really drive something that is going to be immensely valuable for that specific landscape or niche. And so, definitely looking for some of those opportunities, and you'll often find some sites that already have some of those things, which are certainly attractive. So outside of the competitive landscape trends, there's a few other areas that I like to dig in: content, link analysis, and then monetization analysis. So touched on monetization analysis a little bit. I'll probably cover that in a minute, but hitting on link analysis first, I think this is obviously really important for anyone who is acquiring an SEO first asset. You want to be able to benchmark your overall link authority and just overall link profile versus your competition. Are you at a similar stage of authority as some of the top players in the landscape? what does your link velocity look like versus your competitors? So how fast are you gaining links, and are you outpacing the competition, or is the competition significantly outpacing you in terms of net new linking root domains per month or quality linking root domains per month, which can certainly inform how you potentially build links in the future if you do acquire that asset. Or it could be a red flag if there's a lot of links dropping off and that curve doesn't look so great. I'll also look at topical relevancy distribution of links and really understanding how does Google potentially see this site and what they're an authority in, and is that significantly different than the competition, and is that difference a good thing or a bad thing?
Are you using Majestic for that, or what's your tool of choice to do that?
Yeah, I like Majestic Topical Trust Flow for a quick analysis on topical relevancy distribution. I'll also just do my own analysis based on the sites and pages that those links are coming from, and essentially just doing some text analysis to understand the categories behind those. So looking at that as well as just the pages that they're going into on the site. So if the site covers a myriad of different subtopics, then just understanding the percentage of the link portfolio that goes into those different areas. And then again, the types of sites that are linking to those and what topics they're talking about, and then layering in stuff like Majestic Topical Trust Flow is a great way to get kind of a topical relevancy distribution of the site to understand if that is a big risk or a potential really big benefit of acquiring that property. And then other link analysis stuff, so anchor text distribution, obviously a really common one for link analysis. Also just going to be looking at signs of blatant spam and just other red flags in the link profile, and then also just how they're building links. So what are the tactics that they're using? Are they really overweighted on one tactic versus another? Are there some riskier tactics that are making up a larger percentage of their link portfolio that are going to increase the potential risk on that investment? Or are they getting a lot of natural links coming into their link profile that are really solid from relevant publications? So that is a big component of the due diligence is understanding kind of the foundation that the site is built on from a link standpoint.
Nice. That sounds very comprehensive. Love the kind of thought process to do things like look at link velocity, look at not just the traffic of the site, but individual URLs in case one or two domino off, or even a top few keywords. That is a smart way to make sure you're making a good acquisition for sure.
Absolutely.
So you mentioned in brief while you were talking about due diligence and deal structure and valuations. We talked about valuations already, but you said there are a lot of places to like look at that. I think you said that.
Yeah.
What are your kind of like reference points for understanding that, hey, I'm kind of at market with what the valuation is right now that people should look at?
So doing a comparison between, hey, I'm about to offer this, is that comparable to what the market is? Is that what you're kind of asking?
Yeah, sort of. I think you said there are places where you kind of referenced that, like say 30 to 40x multiple to understand, like this is the going rate for this kind of site.
Yep.
Maybe I misunderstood, but
Yeah, no, sort of I think marketplaces are a great way to gauge that, especially for those lower to mid-tier niche website acquisitions where a lot of that volume happens. That's honestly where you're going to get a pretty good baseline for what potential multiple there is for the site that you're potentially acquiring. I also, I like to use that as a reference, but I'm also just very tied to my own process for coming up with a valuation that I think is fair. Because everybody has different risk profiles, right? There are some folks who are going to be super comfortable with acquiring websites or other assets where their payback period is significantly longer than potentially my comfort level. And so, if your payback period is 2 years, 3 years, or whatever to break even, or if you're just getting started out and say, hey, I want to make my money back in 6 months. That is a perfectly fine acquisition thesis, and it's really all about like what you're super comfortable with, and making sure that you're doing deals that are going to be financially comfortable for you and your family and your business, because you never want to overstretch yourself. But just
Makes sense.
yeah, going through your own process and really understanding what's going to be fair for you, and comparing that versus your kind of growth plan for the site, which I think has to be part of your acquisition thesis of like, all right, these are the first 50 things that I'm going to do after acquiring this site, and these are the potential impacts of those inputs that change the enterprise value of the website after acquisition.
So there probably a few, I mean, people can Google like buy a website, sell a website, and see some people doing some decent SEO on that thing. I mean, we mentioned Flip already. I know FEI International is another prominent one. Are there any other marketplaces where like typical, I don't know if you see some places just have like inflated numbers, like where should people?
Yeah, there's always going to be some inflated numbers on pretty much every marketplace, right? Empire Flippers is another really popular one. Investors Club is another really popular one. There's a lot of Facebook groups nowadays where folks are buying and selling niche websites, and a lot of other marketplaces. So, and there's even some feeds that are being set up where folks are aggregating a lot of those opportunities as well, to basically compare and contrast a lot of the deals going on in those marketplaces. But yeah, plenty of ones to go out and explore and look at like what certain quality of sites are going for in terms of typically monthly recurring revenue valuations.
Makes sense. So done due diligence, you agreed on a deal. After you've done due diligence, we've now learned in this conversation, which makes sense. In terms of just tactically like the process, are there like tools that make this easy? I know you can obviously put money into I'm forgetting the word,
escrow.
Yeah, like what are there any like quick tools you recommend, or like you probably have your own stuff, but yeah, how do people do that? Like my instinct, I haven't actually gone and purchased a website, amazingly, as an SEO that's experienced as I am. Yeah, like what's the quick TLDR of how do people do that without feeling like they're going to wire their money and it's going to disappear?
Yeah, absolutely. So before I get to that, I wanted to hit two other things on due diligence real quick, to make sure that we close the loop on that. One is on-site content analysis, looking at any major technical issues, and then content quality versus the competition, and seeing is this going to be able to be sustained over time, right? Like, will that content stand the test of time? Or does it need to be significantly overhauled? And then looking at the history of that site, whether it's archive.org or, other methods to really understand where it's been. And then I'll also do some pretty significant monetization analysis as well, which I sort of touched on with some of the affiliate deals. But really, like, how stable are their revenue streams? How diversified are their revenue streams? Are they getting revenue from affiliate, info products, display, other like fixed fee ad placements, things like that? And then I think risk of monetization is really important as part of your acquisition thesis. There are a lot of potential buys out there where they have monetization deals that are based on personal relationships, that if that person sells the site, the risk of that monetization or that revenue stream going away is pretty high. There's a lot that just needs to be considered on that front as well. And then I mentioned the macro environment, but just doing some deep monetization analysis for current, how they're making money, as well as stuff that you can immediately turn on. Again, going back to kind of your growth thesis for acquisition, is a really important aspect of due diligence. And then, if there's any significant monetization deals that you have and they have, that's actually a really big component of a lot of these bigger acquisitions that we've seen in the SEO landscape over the last several years, is essentially acquiring direct competition. So I mentioned earlier around the sophistication of the affiliate landscape in certain competitive niches. If you have custom deals with certain brands or just other ways of monetizing that your direct competition don't have, that difference is obviously an immediate, growth lever.
Makes the deal make sense.
Yeah, I've seen commission levels where companies have 10x the commission percentage of the base level affiliate deal, where it's like literally financially irresponsible not to buy your competitors.
They should, just go buy everybody.
For sale. Yeah, exactly. And so
I've heard about that with Amazon, where it's just like, a lot of people at scale get better deals sometimes. It's like, how do I get a better deal from Amazon and stuff like that? Yeah.
Yeah, exactly. Anyways, just wanted to hit on those couple of things.
Yes.
Yeah,
process for acquisitions. Yeah, tools that is in your tool set there.
Yeah, absolutely. So in terms of prospecting for acquisitions, it's honestly a lot of the basic SEO tools that we use on a daily basis. So I am using tools like Ahrefs or SEMrush to do keyword research to understand who's ranking in a specific landscape and who might be independent or available for sale. There is a report in the Keyword Explorer in Ahrefs called the Traffic Share by Domains report. That is a really nifty one for just doing some like quick market share analysis. So if you just throw in a keyword footprint of 100 keywords, 1,000 keywords, whatever, of a landscape that you want to analyze and see who the big players are, you just throw them in there, and then Ahrefs applies their click-through rate curve, and then you can see stack rank who has the most estimated traffic share in that landscape. So that's a really quick and easy way to get who are the big players in certain landscapes, and also for, really niche keyword categories. Like let's say you're just looking at like calculator sites or specific tools or folks who have a lot of stats and facts pages and things like that. You can use tools like that to really get a really easy gauge of who has a lot of content and market share in those areas. So I'll just do a lot of kind of normal keyword research to find acquisition targets. And then I also really like approaching acquisition prospecting from a links perspective too. So really doing honestly a lot of these same approaches to the way that I might prospect for link building and building my lists that way. If you're looking at links that you potentially want for your current website that you're operating, and you really like the quality of those pages and the sites that you want links from, generally the other sites that are linked out from those pages and sites are probably going to be somewhat up your alley as well. And so nice. I like to slow down on link prospecting and really understand, are there any other sites that are in these neighborhoods that are potentially good acquisition targets that you might even uncover some really diamonds in the rough that way, because they could be like old as shit and not getting a ton of off the radar, not getting a ton of traffic, but are really high quality from a links perspective, potentially super old and ripe for a lot of optimization. So
did you ever use Citation Labs had this like broken link finder or something like that? Yeah. It was like exactly what you described. I think everyone used it to death.
Yeah, I've used that before, certainly. And then I'll just use tools like Scrapebox and a few others to potentially just get large lists of external links pointing out from pages that are in my outreach prospect lists, and then essentially just mine through those, grab some stats on them, and see what looks interesting.
Nice. Yeah, so if you're buying a site and you just like literal process, do you have your own contract, or are there tools that make that seamless? Are you like...
So there's a lot of marketplaces that are going, if you're going that route to sell your website or buy your website, are going to handle all of that stuff for you. And so, a site like Flippa obviously is going to handle all that stuff for you. Investors Club, I think I've sold one website through there, and their process is really smooth and they handle the entire transition and all the paperwork and things like that. But if you're just approaching it individually, I would just recommend, obviously not financial advice, not legal advice, just hiring, hiring a lawyer, some service to help you get an asset purchase agreement spun up. And I kind of have like a default template that I go off of for each of my deals that I customize just based on what the site is and what the purchase price is. But pretty much all of my stipulations or legalese in that asset purchase agreement is going to be pretty consistent between acquisitions, and so I'll just adjust it slightly for the buyer. And like I said, a lot of the deals that I'm doing are going to be just me and another individual, and so there's really not a ton of complexity to those deals. When you get, I think, into the larger 6, 7, 8, 9 figures, obviously there's going to be a lot more complexity, and lawyers and financial teams need to get involved to redline everything. And oftentimes there's a lot of back and forth for this needs to be in the deal or this needs to be struck from the agreement and things like that. So it'll take some time for a lot of those big deals to get done. I've seen it certainly take several months for a lot of the paperwork to get ironed out for a lot of those big guys.
For those marketplaces, is there an average take rate? Like, what is their cut off the top typically?
So for the bespoke marketplaces like Investors Club, I think they're 5% of the deal value. And so if it's your first time selling a website, I think it's a pretty decent deal to make sure everything gets done properly. It's all white glove. They do the transition for you. So I think, nice. It's not bad. Pretty standard. Not bad at all.
Got it. Nice. Well, this has been great, Mike. Yeah. Anything we did not touch on or I maybe brushed over too quickly in this process that you'd suggest people take forward?
Let's see. I don't think so. M&A and SEO is really, really interesting. Like I said, there's a ton of deals going on where if you just kind of lift your head up and look at the sites that are passing hands really, really often, there is just a lot of really interesting insights to gain around what larger companies' broader strategy is in terms of gaining market share in specific categories, or just what their growth plans are, and a lot of stuff to learn, I think, for maybe smaller website owners, and understanding what are some of the ways that you can create a competitive moat for your site or a site that you're potentially looking at acquiring, or even what those things are to look for in potential acquisitions to add to your portfolio. There's also a lot of different types of acquisitions that are going on outside of just websites. So I've seen even more recently folks just acquiring stuff like YouTube channels or podcasts or Twitter lists or whatever else. So there's and then building sites and other properties around those communities or around those assets, which are certainly things that maybe compared to your really basic affiliate website are going to be ones that really stand out. And so I think there's a ton of interesting stuff in M&A, a lot of deals going on, but it's really exciting and a lot of fun to work on. Of building your investment thesis for what's a good bet and what's a bad bet.
So I did think of one more question for you as you're talking about that.
Yeah.
So say you're a seller of a website, you've got say a decent website, maybe it's valued in the 6-figure range. What would your process be to maximize the sale price of that asset? If that makes sense. What would your go-to-market be?
Yeah, absolutely. I think certainly all depends on context, but I'm going to try and clean up as many potential red flag issues as possible that could limit the multiple that I'm going to receive on that asset. So if there are potential significant content quality issues or link quality issues or something like that, I would want to clean that stuff up first. I also want to make the transition process as simple as possible. So if there's a lot of custom plugins or functionality that require potentially a lot of insider knowledge to operate and things like that, I might try and turn some of that stuff over to a lot simpler setup that is really easy to transition to the new seller. And then certainly if you want to pump your revenue multiple, making sure that you are have kind of all of your monetization channels turned on, and are doing everything that you can to kind of juice conversion, or a lot of times if it's a seasonal business, making sure that you're kind of selling right after the peak of the seasonal business, because a lot of marketplaces will go off of last 6 months average or last 12 months average. So especially if you're at a high watermark for traffic, you want to make sure that you're getting kind of the fairest assessment of your overall average revenue for trailing 6 or 12. So yeah, basically just trying to make it a very clean transition and really attractive opportunity for folks. And if that's the case, then I think there's going to be a lot of interested buyers within the first 24 to 48 hours. At least that's been my experience when selling my own properties is, when it can stand out versus what else is within that marketplace or wherever you're listing it, you can get a deal done pretty quickly.
Makes sense. All great tips. And that final point was one I was curious about as well, is like, are you listing on a marketplace? I don't know if those have like exclusivity or how that typically works. Do you have a preference of a marketplace?
I like more of the private marketplaces. So I mentioned Investors Club, where I've sold one of my websites. Facebook groups are, I think, another good one to potentially sell some properties. You could obviously list on one of the larger marketplaces, like Flippa or Motion Invest is another one as well, that you could potentially list on if you're just getting started out and wanting to sell your first website. Really, like, I feel like in our position in the SEO community, like when you want to sell something, it's like it's a lot easier to go to some of those groups and marketplaces where that you're going to find folks who are of the same mind just on the buying side. I think if you have a site that's doing a much more significant revenue, like, we'll say $1 million plus a year, that's something that likely is going to be facilitated just through either relationships, in their category, broker, something a little bit more significant where you can get more of a large-scale private deal done. But for stuff that is, sub 100K or something like that, the marketplaces are a decent option to sell. But yeah, for larger deals, definitely go broker, more bespoke.
Makes sense. Well, awesome, Mike. This has been great. I mean, people should find you on LinkedIn. You're a private guy, so I'm glad you came on our content to share all this info. Like, if anyone's doing M&A, definitely reach out to Mike. It'd be crazy not to. But Clean Air Digital is your consulting business, do SEO, M&A advisory, and workflow system work as well, which all good stuff. But yeah, anything I missed here? How should people get in touch with you?
No, you can find me on Twitter. I'm not very active there, but if you send me a DM, I will definitely respond. Yeah, I'm definitely more of a private guy. But LinkedIn, Twitter, whatever. You can shoot me an email through my website as well. Happy to chat.
Nice. We'll share all those links in the show notes for sure, so you can find Mike and ask him your M&A questions. So thanks for coming on, Mike.
Yeah, thanks for having me, Ross.